All right, guys, we've got another Sunday scan for May 23rd in the week ahead. It's getting warm out there. Spent the weekend, or at least Saturday, up at the lake. And it took a little bit of the day to warm up, but it got into the 90s. And then today it's already up there. It's going to be 97, 98 before it goes back to normal next week. But warmth is here. Summer is here. It's that constant reminder that I've been telling myself every single week. Be aware. Usually I do something silly before summer. You know, the market starts to get a little bit wild sometimes. I guess it's been wild for 2 years, 3 years now. But, you know, there becomes that outlier trade, right? And I just want to have my guard up just in case. You know, there's been a lot of good lately. There's been a lot of range getting on the right side of the trade. But, you know, all it takes is that one that you get on the wrong side of. You say, hey, you know what? I'm going to see what it does. Famous last words. Right? And so you've already got some pretty big moves. You had SIGA last week, SIGA, which reminded me of Veru, VERU, and pretty good warnings in the room about the 11 level. The most important part about, you know, in this market is getting on the right side of the trade. And if you find a level that it keeps on holding, there's no reason to anticipate it to break that level until after it does. Let it do it. Let it tell you. Because moves that have come up so much, you've got all that downside after the first crack. Remember, we've talked about it all the time where sometimes the biggest move comes after the initial crack. Not anticipating that crack, but actually after. And a lot of people get exhausted on that front side of the move and then avoid it after it finally cracks. And they say, you know what, screw it. You know, it was too hard. I'm just going to leave it alone. And then, look at Veru this past week. Beautiful trade every single day. I think 2 or 3 days it gave, a really nice unwind off of pops. And that's totally different than trying to find the top, and getting exhausted. And that's exactly what we went over on SIGA. And throughout the day, you saw me remind every time it came back to that level. I saw a lot of people trying to short it and, big stuff. I think it's close. Big stuff. It's going to happen. Big stuff. This, that, whatever. But each time it did that, you saw me remind, hey, don't fall for just one candle, right? You don't want to fall for just that one candle because that's what everybody is doing. Everybody's looking for that short trade. Everybody's looking to fade that crack. But we've talked about themes before. We've talked about sectors before, right? So we've got this monkeypox thing. So that is a theme. And these things will stay stronger, longer than you expect. And they will get absorbed on dips. Remember the virus names with COVID, right? There was all these names that should not have been running, but they were because they were all part of this sector, this theme trade. And whenever there's a theme trade, more and more and more volume and actual buyers step in rather than just, these momentum traders that just come in and come out. So be aware of that. But I think pretty good reminders throughout the day, each time that it flushed. And each of the levels, I'm more than happy to fade a trade after it breaks and confirms that level. And like we talked about every single Sunday scan pretty much, when it cracks a level, that does not mean that it's confirmed, right? So for example, if we'll use, excuse me, by the way, I'm sick for like the 4th time since COVID, and I've probably been like sick twice in my life before that. But using 11 as the guide on SIGA, for example, just because it goes to 1094 does not mean that it's confirmed, right? Because it goes to 1094, absorbs, and ramps right back up to 1120 on that same candle. So same thing, and I know it's repetition, same thing I say in the room every single day, same thing I say every Sunday scan. You want to see it fail, and break away from that trend. 1090s starts to peak out, fails, stuffs into 1090s, breaks down to 1080s. Then you can start to use 11 as sort of your risk parameter. Otherwise, you're just going to get chopped up, and that's exactly what we talked about on Friday. Now, survival of the fittest. We talked about this last week. It's been like this for many months. So if you're still having trouble in this market, it's because it's you. And you just have to adapt. You have to admit to yourself that what was working before is not working right now, and adapt and find something that works during this time until the market comes back to your maybe style in the future. And sometimes for some people that means don't trade at all, right? And that's okay. But it's the people that are continually trying to force what worked 6 months ago or a year ago today that are having trouble. So you have to reevaluate your own self. And when I talk to people, sometimes I get PMs and it's like, hasn't it faded too much? And shouldn't it bounce here? Why are they taking this so low? And like all these other reasons as to why it should have worked and it didn't. Versus, you're trying to find the bottom. We've talked about V-shaped, recovery. We've talked about getting on the right side of the V. And you're trying to find the bottom, 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 bail out, rebound. And then I want to buy, starts to speed up, sell, right? And so all that work that you did trying to find the bottom, you blew out at the bottom. Or maybe you held, but you got back to even. And guess what? You sold for even before the huge trade. Same thing we talked about on the Boston podcast, if you guys watch that one. When, Lance's big thing is, trading on that right side of the V. But where everybody gets so exhausted, they're finally break even, and he's adding. He's adding because he waited. And that's the difference right now. And just being a little bit more patient and letting those trades come to you. You've seen me take a step back and just kind of waiting for these big picture type trades, 9:40, 10 a.m., and so on and so forth. So same thing that my buddy told me many years ago. If you're doing the same thing over and over, expecting different results, just Google that. It's the definition of insanity. Own it and focus on you. Focus on becoming a better you tomorrow. Stop making excuses. Okay? This market is great for traders. It's not great for traders that are stubborn. It's not great for traders that want to force what used to work. It's about adapting, and you need to get a hold of it and focus on what is working now. A couple bullet points, and then we'll get right into scan. Price alerts is huge. So every morning, the last couple days on broadcast, I've been putting all the lines in so you guys could see. Those are the lines. I just set price alerts for each one. I look left, look at where it had trouble resistance-wise, where it had trouble support-wise, and where it might open up. I don't want to be getting chopped up in some type of consolidation pattern. For example, SIGA between 11 and 11:25 all day for 2 hours. Why would you trade that? There is zero edge. So get alerted 11:30s, get alerted at 10:90s, 10:80s, right? And then that way you don't have to watch it at all. And if it hits one of those, you'll be alerted, and then you can make a decision from there. Margin warning. I just wanted to, I feel like sometimes in this type of market, people use margin for the wrong reasons. And so margin basically, 4-to-1, right? So if you had $100,000 in your account, you have $400,000 of buying power. So where you use margin the right way is by spreading risk across multiple names. Where you use, in my opinion, margin the wrong way is by going full 400,000 into that one name, right? So now your risk is huge, and now only 1/4 move. If it were to, I guess, drop 25%, you're out of money. But each move is just that much greater in your account because you're so margin up. So for me, I'm using margin every single day. I mean, I always have, always will. But for me, I like to put it across different names to spread that risk out. Otherwise, if it's too concentrated and something happens, then that's it. Your success or failure is related to that one headline that did or didn't come. All right, so another bullet point I had was account builders. We've talked about this before, but it's still working. SKYH, NURO on Friday. 2 fantastic trades. everybody was looking at everything else, IMMX and all these other names that were going crazy, but nobody was really looking at Neuro because it gapped down. Fantastic trade. And you can see I participated into the strength, covered into the weakness. Same deal with SKYH. I put some on and I let it work while I was actively trading other names. And that's the goal with these quiet type trades. It's not something to be loud about and like, oh, I'm shorting this or that. It's, hey, this is of interest. If it pops in the morning, I'm looking for failed follow through. And I'm there. And if it starts to grind up and go away, then I will move on. If it continues to work, I will let it work. And that's the strategy. But it's harder than most people think because they all want to trade whatever hot name is going on that day. So it's about you becoming a better you and focusing on you, not what else somebody else is trading, not what else is hot, but what can make you better. And last couple things. Minimal small caps are moving. So what that does is it brings concentrated shorts into these particular names. So you saw that on Neuro. Neuro was very similar actually to SIGA, SIGA, where it was coming and it kept on hitting the same kind of base, right? If it doesn't break down new lows by 11, 12, what do you think is going to happen? All those shorts that were in there that are letting the trade work are going to be coming out by close. And so then you had that ramp up. You don't know, are they going to ramp up, stuff it, and it fails, or ramp up and squeeze out, right? So you had the ramp up and squeeze out on Neuro, and you had the ramp up and stuff on IMMX. So those are two good examples for you to review so you can see the difference between the two. And just like I said in the room, I felt like everybody was going to be afraid of the next kind of Neuro situation, NURO, and therefore be very quick to cover into any rush on IMMX. And that's exactly what happened. We had all that exhaustion into 270s, and then the bid fell out. And that is directly related, in my opinion, to the emotions of, thinking back to yesterday on Neuro, oh, I don't want to do that again, right? And because of that, it gave them that liquidity to bail because there was so much fear that it could be like a Neuro type trade. So you guys should be familiar with that if you're small cap traders. But that said, concentrated shorts, so they come in. If it does not break down by midday, you've got to be cautious and you have to be covering when nobody wants to. Otherwise, it's too late because the liquidity goes away. And if you have any size, good luck. It's hard. I'm not talking about somebody that's trading 1,000, 2,000 shares, but as you scale in, as you use more size, you can't just get out, right? You need real liquidity to move on. So positioning correctly is key. You don't have to be a hero on every single trade. I preach that every single day. I've really spread risk across different names on these small caps. I don't like to go as aggressive as I used to. I don't need to. Just let the trade work. And you'll notice that all these little, up and downs that you panic and freak out about, you'll notice if you're positioned correctly, that doesn't happen, right? And you've got this idea in your head where you're wrong, and you let that trade play out. If you're wrong, it was worth the risk. That was your plan. If you're right, scale in if you want, or just let the trade work. And, it's nice by the end of the day. SKYH, Neuro, a bunch of these. Then a couple other comments. Crowded trades, avoid or chance it. So the ones that come to mind is VEDU and BGXX. So VEDU is fantastic. Confirmed seller. Each rebound failed, and it stayed heavy. Whereas BGXX, it felt like everybody was shorting. Everybody was on the same side. So although the day that it went to 60, I felt like it was going to be down 50% the next day. And I did, I shorted a little bit early into the close, and then I had stopped, reshorted, stopped, or covered rather. That one was a good one. Reshorted and then covered after hours. I said, you know what? It's just not worth it for me based on the way that I've been trading. If this is the black swan, if this is the one that everybody's still short and they decide that, yes, it's a big outstanding shares, but they're going to, screw the shorts. This is going to be the one. And for me to take that risk, it wasn't worth it to, based on how I've been trading, on all cylinders, firing on all cylinders. I don't want to screw that up right now. And it wasn't worth the risk for me on BGXX to hold it overnight. And yeah, it would have worked, but it is what it is. And you could get in there the next morning. And I fumbled the trade. It would have been probably one of the better of this style, this particular strategy that I have. But I wasn't feeling comfortable on it. And if it had done the black swan type move, I would have been very happy that I was avoiding it. But it didn't. And that's okay. There's always another one coming. And then last but not least, RDBX. I get a lot of questions about this. They were doing that deal, the share exchange type thing. Shouldn't it be a short? Shouldn't it be lower? I don't know. And what's the edge, right? The edge is when there's a big move to react to that. Otherwise, stop trying to figure it out. Nobody knows. And you don't need to figure that out in this market. There's range, there's volume, there's action every single day. Why put yourself in a situation where nobody really knows how to value this thing and nobody really knows what's going on when you've got plenty of opportunities intraday to participate in? It's unneeded risk right now. And if there's not an edge in your favor, in my opinion, it's an avoid. So let's get right into the ideas for tomorrow, and we'll go from there. All right. As always, I'm not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. So, idea here is to kind of give you my thought process and what would make me take a trade and how I would prepare for a particular trade. But again, it's up to you. If you see a trade there, if you see a proper risk versus reward, and it's something that makes sense to you, then obviously you have a trade. If you don't, and you need somebody to tell you to buy or sell, then you shouldn't be taking the trade. You should never be looking to shadow anybody. You should never be looking for anybody to tell you what to buy or sell. That's obviously not what we do here. This is really about kind of creating traders and helping you get prepared so that you can make these decisions on your own. So, SIGA, pretty obvious, squeezer move. I would have expected that it ended at the close. I thought they were going to exhaust everybody out in the close and then kind of hammer down. And, they didn't. I was debating trading it, but it's just like, why would you do that in the last 10 minutes? Just like I wrote in the room. So, the key and, each line that I drew throughout the day, you can kind of see if you just put 11 there, and if you look at every time that it went back up, to, I guess, 11, I think it was 1125s and 1150s. You can pretty much see that it took off after that point. And if you compare this to the breakout on Veru, V-E-R-U, I mean, it's pretty carbon copy. And so basically every single time that this broke that 11 mark, I reminded everybody in the room, don't jump. Just because it flushes does not mean it's hammer time. And you can see that each time that it flushed down, it came back. Flushed down, came back. Flushed under, came back. Flushed under, came back. And so that is exactly what we were talking about earlier, and the same things that you saw in the room on Friday, that just because it flushes out does not mean that it's game time. Because a lot of times it'll flush, everybody comes in, and then they do just enough to support it. And then all those folks that just chase it down are now going to be covering on the top end of that channel, which happens to be around 1150. And so throughout the day, they definitely held that peak, and they just were rotating shorts in and out throughout the day. But you have to remember, the more volume that churns and the more that, just kind of keeps on going back and forth, whatever way it eventually breaks is going to be aggressive. And as you saw, pretty crazy move into the close. So what made me think that, we could potentially see a crack into the close was you can see that it was pretty much exhausting into that 12 range. Each time it was hitting that top, it kept on coming back. So I figured maybe they do one of those moves where they squeeze it out and then they pull it back after hours. But that's obviously not what happened and squeezed out like mad. So, like I also said in the room, I am hopeful for 13 to 15 on Monday. We got it after hours, so pretty standard Varu setup. Pretty much similar to the move. Almost the same price range as well. Twice, we had this move over here, and then we had this nice little breakout. So it might be a good name to review. I don't know, if this is going to go headline to headline and number of cases is going to make it gap up, or the fact we have vaccine. I think I saw a tweet this weekend that they have a vaccine or whatever for it. So I don't know. But what we do know is it's a theme, and relax, relax on trying to find the top on themes. When it rotates out, you'll have plenty of time to participate in the backside of the trade. So, for most of you, the best trade might be just take it off radar, realistically. Most people don't want to do that, but this is going to be the one that takes all your attention. Just like you saw in the lounge on Friday. And I was like, guys, I feel like I've seen 100 alerts for this thing, and it's literally the same price every single time. And stop focusing in on this micro consolidation pattern and think big picture. Roast. Roast was nice. I always like to keep Roast and BJ and Costco is a good example. So BJ, you can see here, we had earnings day, then or earnings day was this day, gapped up, and then came in the next day. Costco, same deal, gapped down on earnings. Then we had some action the next day, and then Docs, same deal. Where we had a earnings move way down after hours, but then came back and kind of squeezed out. And again, back to Roast, same deal, right? So those four names, I've got Roast, BJ, and Costco, CSCO as my main watches. I feel like those are going to be the ones that I'll focus on most. I like the volume, I like the range, and I traded them fairly well. Last week, minus BJ, I had like one trade on it, but I like the range and I like the potential of those. Now, if these things are doing nothing on Monday morning, then forget it. I will set price alerts and I will look for trends to join 9:45 to 10 a.m. These are very similar to the thought process behind UPST, SE, RBLX, RIVN, all of those trades that I've been taking this past week and a half as trading vehicles. Peloton, AMC, going back to what we discussed as far as spreading risk out. Why margin in on one name when you can go across multiple and decrease your risk? Just in case one has a headline. You never know. You never know. So I'd rather have, risk across rather than one concentrated. And then SQQQ is always a fantastic one to kind of keep radar on. Big way to close out the week. Last week you guys saw where I shorted. You guys saw the key levels. Same concept as SIGA, SIGA. Same concept where each time it came down to the levels, I reminded, make sure if you're, sized up, be proactive, be covering into those levels. And then as it proves, you can always scale into the trade. You can always scale into that winner and add, do whatever you want. But you need to see that level peak out. And you saw it. You saw it test a few times. We had a 62.40 was the first one. And then as we broke under that, you saw me right in the room, 62 was the second one. And 62. And the reason for that is you can see how it came back and consolidated, started to form a nice base, flushed out, held. So to me, once 62.40s peaked out, that's a good sign. Once 62 fails, that, in my opinion, is the sentiment shift. And then we'll start to have that unwind. And you can see how many times it tested, just like SIGA, right? Where it's testing 11, it's holding. it might go under the level, just like you see here, but it came right back up. Might go under the level, but it came right back up. Once it fails and it kind of retests and it fails to come back, that's when you know. And that's the difference between something like SIGA, which holds, and then something that confirms. So you can see there, and you saw my trade in the room where I started short, and kind of the walkthrough on something like that. Next up, under failed follow through. Failed follow through is typically a chart that I am interested in watching for some type of morning action. So I'm not looking for it to go straight down, but what I'm looking for is some break in momentum, failed follow through momentum, where it's been going steady up, steady up, steady up, and it has yet to take a break, or maybe it cracked, but I'm looking for a pop, retest prior resistance, and then starts to fade off. So we've got a huge move here on this BL. Again, it does not mean that I am short bias. I do not think that this is going down. However, if it were to gap up and reject off these prior levels on the daily, and it comes into this range, then I'm starting to get really, really interested. So gap fill is into the 73 to 76 range, any exhaustion, or if it has trouble, at this 73 level and it starts to fail to follow through, looking for fade, retest fails, fade, retest fails. That's what I'm looking to join. And we had a fantastic trade this week on VTNR. May not look like much on the intraday chart, but when you have a high conviction kind of trade and you can kind of jump on the right side of the trend, you've got a great opportunity. And so, for example, you had this move on, I think it was Wednesday, but you've got this morning flush. So I had started in, but then I was waiting, and I think the level that I gave in the room was 1580s, if I remember correctly. And you can kind of see why I picked that level. It's never exactly where a base is or where a top is. It's where the congestion, where it kind of hangs around, where the most congestion is where I personally pick my levels from. But you can see how it started to fail to follow through. You had this exhaustion candle right here where it kind of ramps, sits back, then ramps, confirms, and then you had another one right over here, and then you can see this big tail that fails, and then it gives way. So it may not look like much, but for me, this is a high conviction style trade where I can scale into a winner. And most importantly, you got to be there on the flush. This is not a market trying to get top and bottom. This is a market about how much can I scale in, and then where do I reduce risk. And as you size up, as you size more, it becomes more and more pressing to make sure that you're one step ahead. Otherwise, you're going to find out that no matter how good your trade is, once that liquidity dries up, you can't get out. So it becomes increasingly important as you increase your size to put those orders out there, where you'd like them to hit. And I'll tell you, last week, there was probably 6 or 7 times where I was frustrated that I didn't cover on a particular name, and then I looked back and I realized that I did because I had put orders in there. And we've talked about this before. When you are first getting into a position, you're not emotionally attached to it, right? So where you think it's going to go is probably your best bet. And as it gets there, usually I'm gonna see what it does. I'm up a lot, but if this cracks, I'm gonna make a lot of money. That's emotionally driven. Whereas when you first entered the trade, your trade goal was for it to come into this level. Well, guess what? Put an order there for 25, 50, 75% of your order, in my opinion. And more often than not, you'll be happy because you'll look back and be like, oh yes, I forgot. I had an order and I covered. Good. And then if it stays heavy, you can always rescale into the trade. But that has helped me in more way than one this past couple weeks, just by putting those orders in ahead of time. Because a lot of times it's just one order that comes down and market sells. You capture that and then it comes right back up and you're glad you're out. CMRX, this is kind of getting some action with SIGA. This is where I will focus with SIGA. I'll have SIGA up as if I had the SPY up, right? And I will use it as a guide for this trade. Because in my opinion, this is probably one of the junkier ones based on the news that it just had. And I want to focus there when SIGA starts to get weak. RCMT, I am looking for same deal as VTNR. Just because I'm looking to short does not mean that I want to stay short, fight short, right? I might put on a trade each day, a couple thousand shares just to kind of get in there. And maybe it goes up a buck and I just cover it at the close. That's fine. But the day that it breaks, I'm going to be scaling in, scaling in, scaling in. I just want to be there. I want to keep an eye on it. But don't get in the mindset that this has to break down. You know, it's been on a tear. But when and if it does take a break, it's going to be great. For right now, I would expect it to continue to go. It's had a nice crack day this day. Had another crack day this day. But, you know, so far, it's in trend. So let it do its thing. Set price alerts. Don't forget about it. Same thing, VTNR. Same deal. We had a correction a couple days. But let's see what happens. Don't force the trade. But let's look for, you know, a nice possible breakdown in the near term. But if you fight it, you could be fighting it into the 20s, 18s, 20s. You know, so you don't want to jump in front of that kind of stuff. IMMX, really nice opportunity. They have a lockup in a month. This is an example of, you know, if you're trading it, you know, watching your sizes, not hammering into the 240 line. I talked about in the room 240 being the key level. So anybody that was, you know, aggressive into the 240 line probably covered into this area over here. So you've got two little breakouts over the 265 basically level. Just even off that number. You can see it was pretty much peaking out. I guess it was a little lower. But pretty much was peaking out in the 260s or so. So the channel was 240 to 260. And then it triggered some shorts that were probably oversized. And then they obviously walked from the trade. And you can see how after it came back down and confirmed at 240s, you know, that was it. So that was a great trade. I was short all day. I shorted some into this 260s over here. I had added a little bit. I shorted some into this move. And I was in the mindset that any big moves intraday was going to, you know, just basically squeeze out the oversized traders because of the Neuro situation the day before. So that said, I had, you know, a little bit of confidence that, you know, it was just going to be a squeeze out and then they'd walk and likely, you know, slam down. And because of that, I didn't go ultra aggressive because I wanted to give it the wiggle room in case it needed to do that, or in case it actually did hold like Neuro, and where I could actually either cover or add in the event that, you know, I wanted to add. But either way, nice opportunities. Perfect world, 240s retest and look to you know, fail to follow through. Other than that, not much on the continuation scan. JSCE, no volume, but just monitoring in case we get that exchange again. I don't think much more needs to be said about that. You guys should know what that means. You guys saw it on Clue. Huge opportunity on Clue. Anybody that paid attention. Like I said, I was mentioning it one time, like a week and a half, 2 weeks ago, and then it's up to you to, you know, watch the tape. So big opportunity there. Yes, I minimized it, but, you know, it was still a big one. So it was still nice. SNOA came in a little bit, but overall it's been holding trend. Like I said, you know, you should expect that it might have a little bit of trouble in this range, and there's nothing wrong with locking in. But so far, that liquidity trap worked out pretty well. AGRI, I think that this is just a crowded short at this point. It offered some great short opportunities over the last couple days, including nice gap downs. So I participated in that. But at this point, it should have cracked. And you can see that the 260 level is basing. So you don't want to fight unless we have a blow-off move or it's under 260s. In which case you wouldn't be fighting, obviously. But as you guys know and saw, 230s was the key level for this entire move. NMVC. Steady ripper. In my opinion, it's just a monkeypox kind of sympathy type trade, which, you know, it caught momentum. So nothing to jump in front of, because what happens is everybody shorts it because there's no reason for it to be up. And then you have the exhaustion, and then everybody hammers in, and then it holds. and you get that huge move. So wait for it to fail, wait for it to, everybody to try to figure it out, then come in my opinion. Eyes had some nice moves. This has been having an insider buyer, so worth a watch. And same thing with MITQ. Possible liquidity trap type situation. We had a big 16 million share day here, came back, it held, so maybe we get a second PR. And if so, that could be squeezing out everybody that shorted this day. And maybe they get up to the 160s or something and give another big trade. But those are all continuation trade ones, the scans that I've typically look for, but it's not something that I'm really participating in this market. For me, it's just focusing in on the basket of trades to trade instead of trading the market. So UPST, AMC, SE, RIVN, RBLX, all those ones. And then, every day I just kind of add a few others just based on what's happening in the markets. And for me, I like to surround an event. So that could be earnings, that could be a particular news event, but I'll trade it surrounding that 2 or 3 day period. And one of the biggest things that I find is if you don't get a trend on day one. So if there's earnings and it just kind of, does this throughout the day, don't take it off radar and mark the top and the bottom of that channel. And as it breaks either up or down, usually that's a very clean move. But most people have gotten, kind of exhausted from trying to figure it out the day before that they just avoid it. But that's why I have Roast and Cisco on watch. So that's it. I hope you guys have a great rest of the weekend, and we'll catch you in the room.